In this video, we are going to be going over my timeline for the AMC Moass. As you guys know, I have my own personal money in AMC. It is my largest declining position in my portfolio. So these are only my thoughts, but there is two scenarios that could play out. One is just around the corner, and the other one is going to take a little bit more time. And I will let you guys know which one that I am leaning towards, and then you guys can come up with your own conclusions. But I think there's no other way to say this, but one of these situations is going to happen. And this is not a trust me, bro, I know somebody that knows something that is telling me this information. That's not the case. Nobody on YouTube knows anybody that knows when the Moass is going to happen. But this is more so taking 5 years of investing experience in short squeezes and long-term investing and bringing that all together to provide you guys this video. So let's dive into it. Don't short the like button. There's actually a lot of failure to delivers on the like button, so hit the like button for me. Subscribe to the channel if you guys have not already. As well as that, this video is sponsored by Moomoo. Check that out, link down below in the description. Get up to 5 free stocks worth $3,500 a piece just by signing up, depositing $100, deposit $2,000, and get those full 5 free stocks. So certainly check that out. You could sell those free stocks and buy or sell some AMC. That's personally what I did when I signed up, and I got myself a couple free shares of AMC just for doing that. So certainly check that out. If you guys also want to be a part of the trading community, no matter what happens, if the markets go up or down, or if AMC goes up or down, or any other stock or equity, you can profit on both sides of the equation. And we hit a lot of great trades in the past couple of weeks, some that are just outrageous. You know, it's not always going to be like that, but we do hit a lot of home run trades. So check that out if you guys want to be a part of it. But enough with that. Let's dive into this situation and exactly what is going on. I understand not everybody that is watching this video watches every single one of my videos, which that is fine. I am glad you guys are here. But we have to cover a little bit of backstory here before we dive into the two scenarios. And the biggest thing you guys need to know is that regardless of who you watch or what they say, it does not matter what specifically happens with AMC stock. It does not matter. That does not cause the Moass. And I'm sure some of you guys know that. I'm sure some of you guys don't. That's why I want to put this out here. If the price of the stock goes to 100, 200, 500, or 1,000, it does not matter if the shorts are not forced to cover. That's the key. When are they forced to cover? They are only forced to cover when their capital goes down. And what I mean by this, imagine if AMC stock went to $1,000. If these hedge funds have enough money to service their margin calls, no way in hell are they going to cover, right? The large positions, the guys with a lot of money. The small guys, they would probably be forced to cover, but that would keep a cap on the Moass because the mid guys, the large guys, liquidity ranges would not be forced to cover. You really need everybody that is forced to cover to see the Moass to go to my price range, my price brackets in between $5,000 and $10,000. So that's the most important thing. Now, what is currently going on? You are seeing a liquidity crunch that is taking place right now. Let me pull up the 10-year treasury yield for you guys right now. Just back in December, this was really, mid-December, December 16th, the rate for a 10-year treasury was 1.42%. This hit a high of 2.04% just a couple of trading days ago. So what does that mean? The markets have priced in 2 rate hikes. If you guys are unfamiliar, 1 rate hike is 0.25%. So it is essentially priced in 0.5% in rates. That's why you're seeing, if you're going to apply for a mortgage like I am right now, trying to get another rental property, the rates have went up. Now they're sitting, the national average is about 4.1%, give or take, depending on your credit. And that's drastically different compared to a year or two ago when the mortgage rates were around 2.5%. That makes a big difference on the amount of money that you have to pay. The same thing applies for the hedge funds and the institutional investors. When they borrow money, we know they love to use margin. They love leverage more than you love leverage. And I think that says something right there. We all like to use leverage now and again and make some sweet tendies, but they love it more than anyone. So that's a part of their problem. But capital is getting more expensive, and it's only going to get more expensive. And the hedge funds, they don't care about any of that. We went over in the last video, which we will pull it up right here. The margin debt went from $910 billion to $829 billion. Who is the one that is getting out of margin? Unfortunately, it is the retail investors, the ones that have gotten margin called because your Palantirs, your Lucid, your SoFi, your AMC, your DraftKings, your Affirms, a lot of stocks I'm personally in, to be quite honest with you guys, that have great growth stories ahead of them that are going to be great stocks 5 years from now. They're the ones that have gotten beaten down. A lot of, money in those stocks is concentrated in retail investors' portfolios. So it's not the institutions or the hedge funds that have decreased their margin usage. They're still loaded up on margin. So all of that is cleared up and you guys are on the same page. Now, I don't know who you guys watch or what they say here on YouTube about this whole probe with Citadel. I get what they've been saying to a certain extent, but I haven't heard anyone saying that the manipulation is really gone out of AMC. People want to latch onto the manipulation is still here. We're still, fuck the hedge funds, which I get that. Trust me, I get that 100,000 million%, but I don't see any evidence that the same level of manipulation that has been taking place over the past year, like pinning a stock, pinning AMC at a certain price over and over and over again, the exact patterns that point out manipulation, I don't see that happening right now. And I've been tracking, as you guys do know if you've been following this channel, I've been following the option flow sentiment from institutional investors, and nobody over the past 3 months has wanted to touch AMC on the bullish side with a 20,000 foot pole. You have not seen any bullish option activity on AMC in a very long time. Now you're seeing a lot of bullish activity with AMC as far as institutional investors. 61% positive order value as far as last week. A matter of fact, 151 orders totaling $68.16 million over the past 1 week. And what happened over the past week? This probe became leaked to the public. And now they're even facing racketeering charges, criminal charges. We're not talking about fines. We're talking about prison time here. So that's pretty clear. But AMC has been doing its own thing for about 2 weeks now. Since really back here about February 7th, which was about roughly 2 weeks ago, on Monday, heading into tomorrow, was about 2 weeks ago on the dot. So all of this correlates with AMC starting to go up and starting to see a lot of free market activity going on. Not really that manipulation that we have been seeing over the past year. AMC should be falling through the floor if the manipulation was still going on right now, as we are seeing a lot of fear almost every single day. And AMC, like 65% of the days in the past 2 weeks have been positive, and the days that we are positive were up 10.19%, 15.28%, down 1.85%, up 1.18%, down 5.5%, up 10%, up 1%, down 3%, and down 5%. That looks more like a free market rather than seeing this. Just bleed out and bleed out and bleed out. So, I will be the one to tell you and be the one that is either right first or completely wrong, that the manipulation is gone. So that is also very encouraging, and it should be encouraging by everybody watching this video that we could finally see the Moass and let the free market do what it's going to do. So I wanted to put that out there. Now, let's talk about the two scenarios here, because like we said, we need to see the liquidity coming down. With this whole Russia-Ukraine situation, if they do invade, If they do, that is going to jack up the interest rates. It's going to make the 10-year treasury bond go crazy. It's going to make it go up a lot. That's going to put pressure on borrowing money because the federal funds rate has very little to do with actually borrowing money. It's really the 10-year treasury bonds, the free market, what they want to price things at, which revolves around the treasury bonds, which people would sell out of those, the rates would go up. That's how it works, kind of like a dividend stock. So it would become harder to borrow capital. It would cost more, as well as that the markets would take a sharp downturn. And I don't think it would be long-lived, but the markets would come down a lot. If the panic sets in and hedge funds really start to get margin called because they're not hedging out their portfolios using your Apples, Microsofts, or the S&P 500, their largest holdings in their portfolios, like we've went over, the short interest is like 0.3% on Microsoft and 0.5% on Apple. So if those stocks come down, that's where the institutions really feel the pain. It's not when AMC rallies. It's when their largest holdings start to come down. And keep in mind, these guys, they're traders. They're not long-term investors. They are traders. So you would see a sharp decline, and it might stay down for a week or two, but the markets would eventually rally back up because wars, as long as Americans are not, boots on the ground, the markets don't stay down for all too long. The fear doesn't last for that long. During short-term conflicts, especially something we are not even a part of. Now, oil going up, that's a different story, a topic for another video, but that's what would happen with the markets. Now, in this scenario, keep in mind, today is February 21st. AMC has their earnings call on March 9th. So it would be a little bit of weird timing there to see AMC's earnings come out. The stock would probably rally pretty hard either way off of earnings. I think you're going to get some great guidance from Adam Aron, and that's the only thing the markets care about. You're going to get a profit in 2022. Mark my words. He will say there is going to be a profit. Mark my words on that one. So the stock will rally. Algorithms will bid the stock up because that manipulation is gone. Whereas at the same time, the markets might be in the toilet. So you might see the smaller shorts covering, driving up the price. You might see the mid guys start to cover as the price of the stock goes up. They have less money. And then you might see the larger guys start to cover as the price gets wildly high. And you see margin calls across the board. Everybody's getting drained. And they might be forced to cover because you got to keep this in mind. Shorts are not forced to cover unless they are out of money to service their margin calls. No short wants to cover at the top. It's only your Melvin Capitals, Archegos that are forced to cover at the top because they ran out of money. Every single, hedge fund in the world that is short and does shorting on stocks, they don't cover until the stock comes down. Keep that in mind. It's mostly gamma squeezes that happen when stocks rally and FOMO buying. It's not really a short squeeze most of the time unless you get a Volkswagen situation and the stock drew straight up, right? And I'll keep you guys informed. We will know exactly when the shorts are covering. So you're not going to miss anything. Subscribe to the channel and you will be kept up to date. The second scenario here, which I think is more likely, is the markets are going to continue down as we are heading into a recession. There's no other way to put that. I'm going to make a whole video later on today about how that is going to work out. So this is really part one of, a two-part video. Right, so make sure you guys check that out later on tonight because that's going to have a lot to do with the second part. The markets, they're going to come down. We're heading into a recession. So liquidity will be restricted more or less over time. And then that gives us a lot more room to see a catalyst. If the markets go straight down, you really have to see a catalyst come out for AMC, a reason for the stock to go up and for FOMO buyers to head in a very small time frame. But if you see the markets heading down over time, you have a much wider time frame to see the Moass, and I think that is much more likely. The markets, they're not going to bounce back to all-time highs. That's not going to happen. Probably not throughout the entire year. Tightening cycle is happening with the Fed. That's what matters. Liquidity will be restricted in that sense. If shorts do not cover while AMC is at the bottom slowly over time, we will 100% see the Moass. And shorts, they're not covering. They don't want to cover. They're actually doubling down and adding to their positions. With the short interest at last or text update, 21.13%. Last settlement day, January 31st for the short interest, came out February 9th, was at 21.01% short interest of free float. And this timeline, I would really put it at really in between June to September. That time frame is really what I expect. But the good news is, check us out. Come join us in the trading community, and you can make money no matter which way AMC goes, no matter which way the markets go, up or down. You can make money either way. So that's really my take on the situation, and that's what you guys need to know, and I hope this did clear up a lot for you. And if you don't fully understand everything that was said, I think I did a pretty good job articulating this and putting this the clearest way possible. I get it. Rewind the video and watch it again. But at the end of this video right now, we are about to play something that I think is kind of pretty funny. This is a clip from the movie Margin Call, when shit hits the fan, and this is likely what Citadel's offices look like right now. But certainly when the Moass happens, this is going to be the demeanor between them in their office meetings. So thank you guys for watching. Appreciate you guys. Love you guys. Check out, like I said, trading community, as well as get yourself some free stock with Moo, Weeble, and Public. Also, subscribe to the channel if you have not already. I said that a couple times. And also, there's a lot of failure to delivers on the like button, so hit the like button for me. Thank you guys for watching, and I will see you in the next one.